Hello everyone, welcome to the fixed income update for this month. Let's first look into latest outcome from the Monetary Policy Committee's April 26th meeting. As anticipated by the market, the MPC has delivered 25 basis point rate cut and shifted to an accommodative policy stance. These steps are much needed in the current economic climate. For FY26, growth and inflation projections have been revised downwards by 20 basis points to 6.5 and 4%. This adjustment reflects dissipating food inflation, falling crude prices, and global growth uncertainties. On the liquidity front, while there were no fresh announcements, the MPC has ensured that liquidity will be made available as and when needed. Given the aggressive market positioning ahead of the policy meet, we might see some limited movement in the yield in the short term, especially with global uncertainties putting pressure on the INR. However, the accommodative stance suggests that further rate cuts are on the horizon, provided there are no major changes in the growth inflation outlook. Our long-held view was of 50 basis point cut, which has materialized now. Looking ahead, there is a high probability of another 50 basis point rate cut. The current real rate of 2 percentage points is higher than needed in an environment of exceptional global uncertainties. The domestic growth inflation trajectory demands a supportive monetary policy. In summary, we have positive view on duration. However, we will remain watchful of pressures on INR and uncertainties related to US tariffs. We believe a 60 to 70 basis point spread over the projected repo rate is appropriate for the 10-year government bond at this stage. Also note, the background of these actions is tariff-related disruptions in the global economy. The US has recently announced a 26% tariff on Indian imports. While we may be better placed than other economies in terms of a magnitude of tariffs and structure of our trade deficit with US, a slowdown in global growth and heightened uncertainty could impact India's growth by 30 to 50 basis points. These tariff-related disruptions, if escalated, could also affect currency markets. Therefore, the RBI will now onwards need to focus not only supporting growth but also preserving the macroeconomic stability. Thank you.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.